Which is the better dividend stock to buy, Intel or AT&T? I'm going to answer that question in this video looking at a few different metrics, so let's get right into it. Starting with the dividend yield, AT&T offering a dividend yield of 4.52%, Intel offering a dividend yield of 5.52%. The next thing I like to look at is the payout ratio, which measures the percentage of earnings a company pays in dividends. This helps me look at how sustainable the dividend payment is. And the lower the better in this metric. AT&T at 57.87% pays a higher percentage of earnings out in dividends, while Intel is just at 44%. So Intel's dividend is also more sustainable. Not only is it higher yielding, but it's also more sustainable. Next, let's look at the revenue quarterly year-over-year growth going back to before 2014. And both of these companies have experienced similar trends in terms of revenue. And similar downtrends most recently in the more recent quarter. In the most recent quarter, Intel's revenue was down 20% as consumers pull back spending on buying new computers, new electronics, and they spend more money on away from home things, away from home experiences. AT&T's revenue down 4% in the most recent quarter. This doesn't include the update in January of 2023. This is before that update where the company had lost 4.1%. So overall, for AT&T, investors should not expect very fast revenue growth. In fact, the company is expecting management forecasted 2023 revenue growth of about 3 to 4%. While Intel longer term, you can expect better revenue growth. 2023 is not going to be a good year for Intel in terms of revenue growth as the computer industry recovers from all the ordering ahead that consumers did, right? We all bought more computers in 2020 and 2021, and computers, you tend to use them for 4, 5, or 6 years before you upgrade to a new one. And so that's going to be a headwind to Intel as people keep these computers that they bought in 2020 and 2021. Now, 2025, 2026, and 2027 might be really good years for Intel as consumers are going to need to upgrade a massive horde of computers that they bought in 2020 and 2021, probably bigger than any cycle in Intel's past. Next, let's look at earnings per share in the trailing 12 months. I want to see if the companies are growing earnings because, like I mentioned earlier, dividends are paid out of earnings per share. If earnings are falling, then the dividend is at risk. And so that's what I want to look at here. Intel, going back to 2014, I see an upward trend in earnings per share from around $1.50 in 2014 to $3.25 even after the recent crash in earnings per share for Intel. So still upward longer term. That's healthy. That's good news. And the same for AT&T, trailing 12 months earnings per share, less than $2 per share before 2014, $2.70 per share in the trailing 12 months. So again, upward trending, both of them solid and positive. In fact, this leads me to believe that both of these companies have room, if they continue at this pace, to steadily increase their dividend payments over the next 5 to 7 years. And finally, I want to look at the valuation to see which stock is cheaper. And looking at this metric, I use the price to earnings forward ratio. Intel was at 15.85 and AT&T trading at a forward PE ratio of 7.75. So to answer the question, which one of these is the better dividend stock to buy? I'm going to say Intel is the better dividend stock to buy because of its better long-term growth prospects. I think that the computer chip industry that Intel participates in has stronger long-term tailwinds behind it, whereas AT&T is in more of a mature industry. Its growth is coming from incremental device additions onto consumer cell phone plans. I don't think the growth is going to be as robust as Intel's, and then I think that growth in revenue and earnings per share could lead to more sustainable and stronger dividend growth over the next 5 to 7 years. So there you have it. That's my answer. Intel is the better dividend stock to buy here. That's all I've got for this video. Thank you for watching, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.